Hey everyone, let's get a quick update on the merger saga between MaxLinear and SiliconMotion. This has been a wild one. Let me get you up to speed on where we are today. In May 2022, MaxLinear, ticker symbol MXL, a company that designs chips for communications infrastructure, announced its intent to acquire SiliconMotion, which makes controller chips for the memory market. In August of 2022, SiliconMotion shareholders approved the merger, and if that transaction were to go through, it would entitle SiliconMotion shareholders to $93.54 in cash and 0.388 shares of MaxLinear for every share of SiliconMotion owned. A few months ago, I did a video with Ryan Henderson from the Chit Chat Money podcast, and here at Chipstock Investor ultimately decided to buy some shares of SiliconMotion, not just because of the 70% upside that owning SiliconMotion presented if MaxLinear was able to go through with that acquisition, but also because I was looking for a way to play the memory chip market without some of the wild volatility inherent in owning Micron stock. But I said this has been a saga, and here's why. First, after the merger was proposed, MaxLinear and SiliconMotion had to wait antitrust regulatory approval from various governments around the world, and China was taking its time on this thing. Approval was finally given on July 26th, the day that MaxLinear announced its second quarter 2023 earnings. Nearly 15 months, well over a year after the original proposal was made to acquire SiliconMotion. And a lot has changed in that year plus period of time. You can see it here embodied in MaxLinear's stock price in the last year. Pretty awful, steady downward trend, a nearly 70% decline since the start of 2022. And you can see here on the right, MaxLinear hitting fresh 52-week lows, and something somewhat similar in SiliconMotion's share price since the start of 2022. The stock down 44% since then, although you do see a couple of bump ups in price, some false starts, including the one recently here on July 26th, after China's antitrust regulators gave approval for the merger. It seemed like this was going to go through. MaxLinear and SiliconMotion were going to become one new entity. Now, I said a lot has changed in the year plus since the merger was originally announced. And I think a good illustration of what has changed is simply taking a look at second quarter 2023 earnings. On July 26th, 2023, the same day Chinese regulators gave the go-ahead, MaxLinear reported Q2 2023 revenue of $184 million and a net loss of $4.4 million, or negative 5 cents per share. That was a 26% decrease from the prior quarter and a 34% decrease from a year ago. And you can see from our chart here that Casey put together for the third quarter 2023, MaxLinear expects another deterioration, $140 million in revenue, and a $27 million net loss, or about negative 32 cents per share. Things not getting any better for MaxLinear. They have pushed off a rebound in chip sales into possibly the fourth quarter of 2023, if not 2024. This company still has a lot of promise for things like 5G networks, the upgrade cycle to DOCSIS 4.0 in internet service provider infrastructure, Wi-Fi 7 when eventually that becomes a thing. But in the meantime, like a lot of other chip companies, MaxLinear are getting hit very hard by excess inventory that's out there. Similarly, SiliconMotion reported their Q2 2023 earnings, $140 million in revenue and 33 cents per share. Actually, a 13% quarter over quarter increase. but negative 44% year over year in revenue. Things have obviously deteriorated for SiliconMotion as well. However, much like memory chip companies like chip making giant Micron just reported about a month ago, it looks like the bottom is in for the memory chip market and a gradual rebound is starting to set in. It's going to be a long road to recovery, but nevertheless, SiliconMotion perhaps in a different place than MaxLinear is right at the moment. So about that merger getting called off, MaxLinear CFO Stephen Litchfield had this to say on the earnings call. As you saw from the press release dated July 26th, 2023, we have exercised our contractual right to terminate the merger agreement. Please note that we do not intend to share any further detail on this matter at this time, and our call today will be focused on our quarterly results. Later in the call, MaxLinear's management said that based on certain aspects of the original merger agreement, MaxLinear does not have to pay SiliconMotion any breakup fee. Oftentimes what happens when there's a merger, the company that is executing the acquisition would have to pay a termination fee if they call the merger off. MaxLinear doesn't think this is going to have to happen. SiliconMotion had an update of its own on July 27th. SiliconMotion said, in part, after receiving approval from China's anti-regulatory agency, SiliconMotion received from MaxLinear a notice of purported termination of the transaction. SiliconMotion believes that it has complied with its obligations under the merger agreement, and SiliconMotion has not suffered a material adverse effect, and as a result, that the termination notice is not valid. SiliconMotion expects MaxLinear to abide by its obligations under the merger agreement and intends to vigorously enforce its rights thereunder. What in the world is going on here? No one is going to give very many details about this, but it looks like this is probably going to go to the courts. This is going to become a legal battle. This smacks a little bit of Elon Musk trying to call off the acquisition of Twitter. But my best guess as to what is happening here is MaxLinear's financials have deteriorated quite a bit. They don't have a ton of visibility into their core business's recovery. Obviously, the memory market has been impacted to a great degree since May 2022. This is the worst downturn in the memory market, perhaps since the dot-com bubble in the early 2000s. And MaxLinear simply doesn't see economic benefit in acquiring SiliconMotion for the original agreed upon price over a year ago. Sometimes this is just the way things go, especially when mergers like this take place. Sometimes regulators drag their feet and markets change very quickly, especially for smaller companies like these two. So what does it mean for investors? With a lot of uncertainty surrounding MaxLinear in particular, I am a bit worried about this company. They do have a solid balance sheet, $245 million in cash and short-term investments, offset by just $122 million in debt, but they are currently operating at a GAAP net loss, and it looks like that net loss is going to deepen in the third quarter, and we don't know when things will recover. It sounds like maybe not until, I would guess, 2024 before an actual robust recovery starts to set in for MaxLinear. In the interim, I think there are a lot better semiconductor stocks out there. Now, I did say we do own some shares of SiliconMotion, and of the two companies, SiliconMotion is still my favorite. Now, the original reasons I bought this, of course, there was the merger arbitrage opportunity, potential 70% upside if the combination of the two companies went through. I liked the economic benefits of the two companies combined. They're both fabless chip designers. And so when you combine forces like that, you can go out to your manufacturing partners like Taiwan Semiconductor Manufacturing and get better pricing on the wafers. That is no longer going to happen, at least as it stands right now, if this merger is indeed terminated and it doesn't go through. At any rate, SiliconMotion is the actual profitable company of the two. Even in a nasty downturn, SiliconMotion still reporting slightly positive net income, and a very strong balance sheet. At the end of June 2023, SiliconMotion said it had $305 million in cash and short-term investments and zero debt. That doesn't mean I'm buying more SiliconMotion. This is a wild story, one that we will continue to monitor. I'm fine with the very small position we have currently in SiliconMotion, but we'll watch how this thing unfolds in the coming weeks and months. I don't think this is over, so stay tuned for more. Happy Friday, everyone. Have a safe weekend. Remember to hit the subscribe button and hit the bell so you get notifications when we post things on the community board and post new videos. On Monday next week, we've got more earnings roundups for you. We had some great updates from KLA Core, from ST Microelectronics, a top Tesla supplier, and a great update from Enphase Energy, a stock that we recently purchased. Stock is down quite a bit. Maybe not such a great quarter, maybe a market overreaction. We'll take a look and let you know what we're going to do with that new position that we took recently ahead of earnings. And of course, Intel earnings, which surprised everyone with far better than expected earnings, a surprise profit. We'll dig into that and what we think is in store for Intel going forward. Stay tuned, everyone. Happy Friday. See you soon.